Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is a Monday. As you can see by looking at the heat map for the S&P 500, it was a good Monday, at least if you were a bull coming into that momentum from the last week. So very strong day in the market. Good afternoon, Justin. Hello, Patricia. Great to see you guys as always. Hope you all had a fantastic weekend and a good day trading today. Really, it was one of those days that, if your bullish positions didn't do well, it was really probably more bad luck than anything else. And good afternoon, Daniel. Hi, Derek. It was just a day. So long story short, everything was pretty bullish today. So there's a lot of things that, if we didn't get into, today, probably have worked a little too close to resistance for my taste from a risk to reward perspective. But I was kind of scrounging through my watch list that I put together on Friday to find some things that maybe didn't quite get involved in the action if we're going to continue to see some movement. And there's still some things out there, no doubt about it. So, really from beginning to end, it was just a good, solid day. Nice strong gap on the open and just kind of kept going. Here you are on the 15-minute chart for the S&P 500 and really never even broke a 15-minute 9 exponential moving average. That means it was a pretty strong day. So, a very, very solid start to the week and nice, I think, because we kind of have been watching for that pullback collectively and as a whole. I'm sure, we haven't been opposed to bearish trades, but I know a lot of us were watching last week selling as a pullback opportunity. And hey, Whitney, good afternoon. Michael, hope you guys are doing well. It's a little warmer in Utah today. Not much, but it's almost out of winter, whether it wants to be or not. So taking a look at the S&P, one thing that, obviously a good day for, all of our bullish positions, that kind of goes without saying. But I think one thing that, for me at least, what happened with today's price action, it gives me a lot of comfort saying we shouldn't go below Friday's low. We talked about that on Friday. That candle might be important, whether it was above today's, speaking Friday high or Friday low. I think with the upward price movement that we saw in the market, that I am comfortable calling that my short-term swing level of support. So I'm always happy to be able to move a line from one old level of support to a new one. So I believe that this 27, 20-ish that low down here, and we'll probably call it 27, is where we shouldn't go below from a technical point of view. There's still lots to kind of hold it up there, most notably the round 27 and the 50-day moving average. So I'm not necessarily a bear, but I feel like, pretty much, across the board, at least broadly speaking, I'm comfortable saying that here today. Over in the NASDAQ, we are potentially going to be knocking on that door of 7,200 potentially as early as tomorrow, right? As far as movement goes, that could easily happen tomorrow if we want to have another, day even close to like we had here today. Do think we want to keep a close eye on that 7,200. The only thing we know for sure is it's knocked us down on two separate occasions. Once was pretty ugly. Once was a nice pullback, but it's been an issue. So I think we should probably respect it and keep an eye on it. Beyond that, though, like we talked before, I really personally like the NASDAQ, and I think I like the NASDAQ best. If we can break 72, I think that will probably be my favorite index. That'll probably line up with, of course, the tech ETF breaking, many of those tech stocks doing well. Apple kind of getting in the action today, probably line up with some of the things in XLC doing all right too. EA, Facebook, they weren't able to break out today. Google was able to continue its movement, but we weren't able to really break through that. Although, as we'll see when we get there, we're knocking on the door of that potential breakover in the communication services. So really not a lot has changed. Again, I think personally for me, I'm very comfortable saying that this swing low is now where we should not go below from a bullish point of view. And I'm always happy. That, like I said, that always makes me happy. Now, of course, Boeing, the big news and the unfortunate crash over the weekend. And of course, that really hit the stock hard. It was this morning when I was tweeting, pre-market, just trying to find, interesting things, it was around 12 or 13% down. It ended up closing something closer to 6, as traders kind of jump back into it. But I would expect that to be kind of a developing story, much like Matt or Tim, I think it was Tim, I can't remember, maybe it was both of them in the halftime report. I'm just going to step back. I'm going to let that one kind of play out a little bit. There's lots of other things. It's not Boeing or bust, right? So that definitely had an impact on the Dow. Of course, strong day over in the Dow as well. Relatively speaking, maybe a little bit weaker because of that price action, but certainly nothing from a bearish point of view over here. So we still have some room. We do have some room from where we currently sit until our resistance level, probably more room than the S&P and certainly more room than the NASDAQ, I think, before we challenge those resistance zones. And same can really kind of be said with the Russell as far as room goes. We have a lot of room until we work back into that 1600 range. Good afternoon, Thiago. Great to see you, my friend. Welcome, welcome. I hope you are doing well. Always good to see. I've never met many of you in person, but I feel like I know you guys. So always good to see you. As we look here at the Russell, one thing that I will say that is negative on it, and again, I'm going to be fairly picky here because why not? Why not be picky, right? But we did kind of run right back into that 9 EMA. Again, it's not a brick wall. You guys know, at least I don't think that it is, but it didn't break at the same time. That is where we called it good. I'd like to see a little more, price movement to the upside to really get excited about the Russell index. If that happens, there is a lot of room. We do have little moving averages and old little tiny floors, but really our major level of resistance, I think most of us would agree at least, is at 1600, and there's quite some room between here and there. For me, it needs a little more upward movement before I'm willing to say yeah. But quite honestly, if the market is going to run throughout the course of the week and this pullback is going to turn into something nice, we're probably going to see the Russell at least try to keep up, right? That's usually how it works. So, still some room in our indexes. A lot of these things, will kind of, wow, they already hit, came halfway to my first target today or something along those lines. Very strong movement over in the materials coming off of that 54 low. Doesn't surprise any of us. They were one of the areas that kind of held up, right? At least from a technical point of view. Testing that, that old 54 on Friday, good solid movement here today. Resistance at 56, we'll want to keep an eye on that. As I've said many times, you guys know me by now, a break beyond 56, definitely another good bullish signal. We still have some room, we still have some room over in this area. That's what's nice about the deeper pullback that we were given. So whatever happens, we have more room from support to resistance, which opens up better risk to reward ratios for our trades. And well, I'll always take that. Energy, on the other hand, kind of rammed right back into that old 65 range and called it good, at least for today. Now, for me, you can't touch it until it's back within that range. Much like Matt was saying in the halftime report, I don't call this a pullback opportunity in energy. This 65, I've harped on it time and time again. We look at the charts and see how so many of those energy stocks kind of line up, with those levels of support and resistance in those same areas. You got to be above 65. But for me, that's just not enough. You've got to break 67. There's just no two ways around it. 65 scares me. I need to clearly be above 65. So, hitting 65.20 on the intraday tomorrow, that's not going to sell me by any stretch of the imagination. I understand that some folks probably would call it a bullish retracement, and I would understand that argument. I just wouldn't support it, I guess. But we can look at that low that we put in Friday, much like the rest of the market, kind of as that swing low. And for me, what that really is that's where I go bearish. Right now, I'm looking overall neutral at the energy sector. And between the support that we put, and I'm going to call it the 50-day moving average personally, and that 67 level of resistance. Really anything in between, at least the way it looks today. There's so many nicer looking things out there. I'm not going to try to fight it. So keep an eye on 65 wherever you find yourself. I do think you'll agree with me that when I say we've got a lot of history at that 65 area, both as support and resistance. Financials, very similar type of situation. We talked about this Friday, much like energy. It's kind of one of those areas that the breakout is very appealing to me, but practically speaking, that's probably next week as opposed to this week. Although you never know, right? We see a few more days like this, we're going to be knocking on the door of resistance all over the place. We did see some movement, much like the overall market, nothing really wrong with it. And kind of like the energy sector, I could understand the argument for a pullback. We didn't take out that swing low, at least not according to me, we didn't. And so we are still making higher highs and higher lows. So I still understand, that argument for the bullish side of things. But again, it always comes back down to can't trade everything. You have to be picky, right? And I see industrials, which we're about to get to, a potential break in the tech sector, materials, certainly areas that I prefer as a whole. And good afternoon, Sixth. And is this Marquise? Marquise, Sixth, Nolan, you're Marquise, is that right? I think I figured out who you were. So I'll have to get confirmation on that, but I think I figured out who you were. So keep an eye on that 27. Also probably want to keep an eye on this area where we're at right now. This was an old floor, an old resistance level. We do have some overhead on so many of those financial stocks, not to say they can't break through that, but we definitely are going to have some challenges in that area, at least potentially. Maybe I shouldn't say we're going to have them. We should expect them. Probably a much better way to put it. If I knew for sure, I would tell you. So, beyond that, there is some room, and again, I would understand the argument from the bullish side of things. I just personally feel there's better options out there. Industrials were probably the impressive one today, to me at least. Boeing's a big component of anything that it's in, right? Certainly, and the industrial ETF is no exception to that. Gap down along with it, and really, really ran. We saw a lot of strength in the industrial, or resiliency maybe, in the industrial sector here today. Of course, Boeing, coming off the low very nicely as bargain hunters were jumping in. And that's easy to say today. But this morning at what felt like 6:30 in the morning when the market was opening up, that wasn't a given that it was going to run like that, right? And so we did see quite a bit of resiliency, good solid moves in things like 3M, and nice moves in CAT. So definitely a lot of resilience is what I'm bringing out of that. Personally, it would have been easy to look elsewhere. It would have been easy to say, I'm not touching Boeing. That's what I said. It was easy. It was easy. So, good solid movement within this sector. And beyond the movement, I think the resiliency of that sector. Still a lot of room, in my eyes, at least, a lot of room to the upside. 77 really is the level of resistance I'm going to continue to be keeping an eye on. And I will be keeping a very close eye if and when we approach that, because I think that's probably a profit-taking zone, in my opinion, more than a pull up your stop loss zone. But we'll see if we get there, and then we can have that discussion. Really good day in tech. I mean, it really was a great day in tech, working almost to resistance. Much like the NASDAQ, it looks like these areas are going to be the first ones to challenge resistance. And we've all seen this, before, where it's a lot easier to move from support to resistance because there's nothing in the way, right? There's nothing to scare traders off. We get to resistance, it's a much different story. The algo all of a sudden has to say, well, do I lock in profits, or do I hold out and bet that it's willing to break through 72, risking these profits? And there's not necessarily a wrong answer. There always is in hindsight, right? But in real time, there's not really anything wrong either way. Just a little bit easier when we don't have to have those discussions, right? So keep an eye on 72, keep an eye on 72 in the NASDAQ. I think those are the numbers we want to be keeping an eye on. I'm going to love a break. I'm absolutely going to love a break of 72 and 72. It's even lining up nicely in the NASDAQ and the technology sector. We're not there yet. Let's not get too excited expecting a break, but let's get ready. If that's something that we're interested in trading, I do think probably a good idea to think about how we would like to go about it. Staples actually finally getting in on the action here today as well. I still maintain that this is an area that I really am staying away from overall, at least until we break out, at least until we're back into that $55 range and take out that floor, that ceiling. It's just there. It just, it's one of those things that some of the charts are ugly. Some of them aren't so bad by any means. It's just as a collective whole, it just is not very appealing to me right now. And of course, it's easy to say when we go into this side, a month-long choppy sideways range, that makes sense. Okay, well, hey, we're basically not doing a whole lot as a collective sector right now. We had a great day today, no doubt about it. We may be challenging resistance early this week, and as I've said before, I'm very open once I'm sold that that's broke, if that's the way that this wants to play. I do think, quite honestly, and again, I don't know that the ETF's something I'd be interested in or not. It's hard to say without being in real time. But I do think from a signal perspective, a break above resistance is a pretty clear buy signal. And I also believe a break below that low from Friday, that old low from back here, I believe that's probably a bearish signal. So I'm just going to treat these guys overall like they're sideways, much like I have been. I would like a break to the upside, although, again, I'm not overly expecting it. Again, we have a super strong market all week long, good chance that that can happen. But if we just kind of have more of the stock pickers market and drift into that, I could see this being one of those areas that had a little harder time with the levels of resistance that it has to work with. Utilities just went from 57 to 58, and it was I didn't even notice. We've been, broke out of 57 much of last week going into, pretty much into Friday. We just kind of inched our way up, holding that breakout point, really got going here today, pushing, 50, almost $58. This is an all-time high for the ETF. Many of these stocks, as you guys know, in this sector are hitting and have been for some time now, new 52-week highs left and right. So still hard to say anything other than it's a very bullish sector. Nothing that this chart says suggests otherwise. It's hard to make a bearish argument when something hits an all-time high, right? That's a tough sell, I think, at least for me. We did see a nice movement within the healthcare sector as kind of everything was going up today, and we've seen this before when everything's moving, it's easy, right? Whether it's bullish or bearish. I still think that overall this area is something that you really want to be careful of. Still very interesting stocks. ABT, probably my favorite that triggered within the healthcare sector here today personally. But there were lots of nice looking pullbacks. We talked about it. You guys have seen it within the sector, but there's also some real weakness and beyond just the healthcare plan. So for the most part, I think that this ETF still can kind of help us get an idea of the direction things want to move in the short term. Right now, I'm not going to be looking to go bearish on the healthcare plans because it looks like we want to be in that upward swing. We work into resistance and start moving down. Maybe I won't want to be looking for new upward trending bull plays in the sector and start looking at some of those more bearish things. Maybe it's the healthcare plans, maybe it's something different, but that's how I'm going to be using this ETF exclusively for the time being. Really right now, and I think Matt really said exactly what I was feeling when he was talking about it in the halftime report. A break above here, even though I would call it a bullish signal, I wouldn't be excited about the sector. It really is going to be the break up here that gets me to be excited about the sector. And of course, that can happen, right? It's just going to be a little bit of work, and we probably shouldn't assume or expect it to. We should expect that we might have some back and forth within this area because that's exactly what we've been having as of late. So holding up. We have set up a support level. Again, if we break this support level, that's just another sell signal. And I think it's going to be very difficult to make very many bullish arguments, even on individual components within the sector. If we took out this low, we'll have to see how it looks if and when that happens. Keep an eye, if you are following along at that 91 or so area, that has been a price before. Probably should expect it to potentially cause us trouble again. Beyond it, I would understand it. But again, not for me, not at least not right now. We work up here, we pull back, make a higher low, and then break it a week from now, I'll feel quite a bit better. But if we just push through it on Tuesday or Wednesday, it's just not going to be an area that I'm very comfortable with. Again, individual components, I am perfectly happy either way trading within the sector, but I'm going to be very picky on both sides. Good movement over in discretionary here as well, much like the financials and energy sector, though. This is one I'm thinking about next week. The market continues to run this week, and then next week, these areas are breaking out of pretty clear levels of resistance. I still really, really like a break of 112. I would understand if we can see a little more movement to be behind this sector. But again, for me, there's just more room in some of the other areas. At least in my head, there's more room. Whether that proves to be true or not, only time will tell. So I'm going to continue to wait for that potential break. Now, again, individual components, always open to that side of things. We do want to kind of keep an eye on that 110-ish area as a potential level of resistance. That is kind of where we called it a day here today. We watched that act as a support level for the last couple of weeks. So we do have a little bit of history at 110, probably should respect that. Beyond that, not really any reason why we probably can't take another run at that 112 marker, at least in my opinion. Just another good solid day in real estate. It's been very choppy these last couple of weeks with that kind of slow drift to the upside. Today, a very clear, candle, very clear break, hitting an all-time high as real estate just continues to be strong. In my mind, it still is kind of a tougher area, and it has been really over the last month. Once, this one was pretty easy, but then once we kind of got into here, it's just been very difficult for me to want to like anything, even though I can see that it's bullish. I maintained that bullish nature. Don't really feel it's been a very easy place to trade. Maybe a little easier today if we can find some things within the sector that kind of broke out along with the sector here today. It's REITs, and so it's probably not my first place to go in more of a an aggressive mindset, if you will, a little more of a defensive sector. But I mean, my opinions on it aside, the simple truth is it just continues to be a rock star, right? So, certainly whatever anybody's doing it with it from a bullish perspective, I get it. I wouldn't make a case against it. I don't think there's a case to be made against it, much like the utility sector. And then our friends in XLC closing right at 47. Goodness, so right there knocking on that door of, we could potentially break as early as tomorrow within this sector. And as we've kind of talked before, that I think you have to call that a bullish signal. Now, if we kind of think about the sector as a whole, let's take a look at some of these components in here really quick. Facebook tried to break and wasn't able to hold. And as we've kind of talked before, without one of the Facebook or Googles, it's hard for this ETF to do it, to move. They're just big components. But we're knocking on the door of a break. Maybe a Facebook break can push that ETF through that resistance level. Over in Google, you actually saw some really nice move. Both classes of Google are in the ETF. Very strong move here today. So that's very much helping it out. Had Verizon knocking on the door of some resistance, so we're seeing some things that, are potentially challenging resistance right along with that 47. And so that might prove to be a little tougher than maybe, it's not that, we're right there. It's not that hard to break. That's why I think it's a pretty decent, bullish signal if we are able to break through that. So, keep an eye on how we respond there. Again, I have a hard time, doesn't mean it can't happen, but I have a hard time liking that ETF if Facebook isn't moving along with it. It's just a huge component percentage-wise. But we have to respect the price action. We have to respect that is resistance. And I think you have to call a close above 47 a break. So yeah, John, we're looking at the healthcare just a minute ago. At that one, we're just basically going to want to continue, I think at least, to be working on individual components within the healthcare sector. So as opposed to, playing XLV, from a bullish or bearish perspective. Right now, if we're in this bullish swing, I'm going to be looking at the ABTs of the world, the stocks that are in those upward trends, those pullback opportunities, those breakout opportunities, the Mercs, the ABTs, things like that. Once, if we work into that 91 or start seeing some selling, I'll be looking into the more bearish components, such as those healthcare plans, personally for potential bearish plays. So I think within this sector right now, Universal. Yeah, I think UNH is a pretty easy call, really, for me, John, right now. Leave it alone unless it breaks this support. I'm not interested in buying into this. This may very well be the bottom, and I understand the argument of buying at support, but the simple reality is we've failed at resistance, we've failed at support, we're making lower lows, we're below the moving averages. So for me, if I'm trading bullish within the sector, this is not what I'm looking for. Again, maybe I'm right, maybe I'm wrong. I can only speak for myself. I'm not really looking for that. Now, a break of this support level, I would definitely call a bearish signal, and I could be interested in that type of a scenario. So for me, that's almost always going to be my answer. If we've been struggling on the way to support, I'm not really the guy that's interested in kind of calling it a bottom. And again, that can change. So not the stock bid legislation. I don't know. And I don't really know how much that's going to impact the short-term price action, to be quite honest with you, John. And so what I'm thinking, I mean, absolutely it can. But I mean, we're thinking a little bit further, probably past this swing, I guess, if you will, within that. So, I mean, I think it would probably change the sector, maybe as a way I would think about it, more than hurt the sector. I think it would definitely change the sector, and it may not be a change for the better. I don't know. But, I think right now, and again, that's really kind of where, I'm focused on is kind of, these short-term swings, not the long-term ramifications there. I'm not smart enough to figure that out. So, I need to see it develop over time. But yeah, well, UNH, an interesting one too. That's a lot of sport. And you're seeing this, you saw CVS break. You're seeing, these, and this is why you have to be, I think, careful with the healthcare sector. Even though that wasn't exactly what you meant, John, I think it gave us a good example of kind of how I'm looking and going about the sector right now. So thank you. So of course, over in the VIX, nice day of buying usually means the VIX is going down, and today certainly was no exception to that. Over in the dollar, no surprises. Again, anything's possible. No one knows the future, not me, not anybody, but no huge surprise that we're pulling back. A very strong run up into major resistance, seeing a little bit of pullback. That makes perfect sense. I don't think you could call the pullback done yet. I know I certainly couldn't call it done yet. I think a break clearly has to be interpreted as a bullish signal. If and when we get that, we may, we might need another day or two probably to, feel this way, but maybe we get a little bit of a pullback opportunity. Now, overall, and again, I guess you never know for sure, but overall, I still continue to look at this from a from a neutral point of view until we break one way or the other. I'll definitely call a break if we're able to take out that resistance. I'll definitely call it a level, a clean break if we're able to do that, or at least a tradable break. But we're not there yet, still kind of in the pullback phase. I think we can kind of keep an eye on this 97 area as well. Somewhere between 97 and that 96.50 is kind of maybe some areas that could entice some buyers as the week progresses. Metals just weren't ready, to break that 13 over in gold. We had that nice run on Friday, but I think, I think that's a good thing. I honestly do. I think this is developing into something, pretty, straightforward. Whereas, 1280s are support, 1300s are resistance. A break either way is a signal to either side, whether you believe it's a tradable signal or not. Of course, that's always up to us individually. In between this area, I really don't have any interest one way or the other. I think we can just continue to watch us work through here. Potentially, if we break that 1280, I would absolutely say that, John. If we break that 1280, that could very well be a head and shoulders. Right now, I don't think we could say that either way. I think we have to call it, at least I would call it a potential head and shoulders. But yeah, we've got our left shoulder blade, we've got our head. If we work our way back down towards 1280 and then break that, I think we could clearly call that the right shoulder. So for me, I'm going to need it to break 1280 before I would be comfortable saying that. But if and when that happens, I absolutely would expect that I'd be looking at that. And of course, that would, trickle down right into the GLD, the ETF that is, of course, tracking gold. So I'm going to follow the futures if I'm going to, and then trade the ETF if that's the way that I want to go. John, I'm going to, futures first and then the ETF for the vehicle, if that makes sense. Silver, a little rougher, I think right now. Again, for me, really, it's probably a break of 16 right now. So, but 1550 definitely kind of has to be the first challenge for us before we can even think about doing that. We did see nice movement, of course, late last week off of that $15 mark. And we have a little room between where we are and our next level of resistance. We are pushed, and we have pushed back above that 9 EMA. That is a little bit of a positive. I don't think you want to touch this, below 1550 personally. And again, if things were to change, if we go to 1550, we pull back to 1520, make a higher low, and then break 1550 pattern, I might be very much, comfortable getting behind. Anywhere in between, again, if this breaks 1550 tomorrow, I would much prefer the way the gold chart looks. Overall right now, I prefer gold and I really have been this way for quite some time. I really like a break of resistance on silver, but until that really happens, I'll probably generally be preferring gold myself. 1550 is our first real technical challenge, I think, from a technical point of view. Let's see how we operate there. A break above that, I would call it a bullish signal. I just wouldn't think it was a tradable bullish signal, is all. $15 is our support. So really right now, I think the numbers have lined up to be 15 at support, 16 at resistance, and 1550 is short-term resistance. And that's how I will be treating the silver market probably throughout the entirety of the week. I can't see a situation where that's not the case, but you never know the future. Over in natural gas, saw a little bit of a gap down on the open, which kind of a mixed bag from a technical point of view, I think. On the one hand, I think a break above resistance here is a pretty good bullish signal, and I don't want to get it on a gap up over the weekend. So I think that from that perspective, I'm glad that it did not. I don't know what I'll do, but I want to be able to have that debate. If we break resistance, if we break above that 50, if we break that old support, if we put in higher lows and higher highs, I am, I want to have the discussion with myself. Do I or do I not? Right now, we haven't broke support as of yet. We're getting closer to that 2.7 area of support. A break below that, I think you could call that a sell signal. I wouldn't be all that interested in a sell signal, to be quite honest with you, because we have a ton, and I mean a ton of history at 250 or approximately 250. And so there's just not a lot of room. I think you have to respect 250 as a major support level. It would just be way too tight for my tastes, at least. A break below this would absolutely, I would call it a sell signal. Again, I just wouldn't think it was a tradable sell signal. We've got some support, here just right above that 250. So for me, a pull back into that area and then a run and break, that might be even prettier. So exactly, way too tight. Now, if we pull back and hold that support or create a higher level of support and then break resistance, that would be okay. I can see a scenario where this does develop nicely. It just hasn't happened yet. And I think that's a very good thing, because the longer it takes to develop, for me at least, I think the better it's going to be. So I think right now a break still remains a very solid bullish signal. Whether it's tradable or not, that's just a debate we'll have to have ourselves. A break below this support level, I would definitely call it a sell signal. I just wouldn't call it a tradable sell signal. Yeah, like you said, John, just way too close to 250 for my tastes. And crude, of course, just hanging around between 58 and 55. Nothing new over in the world of crude. Sooner or later, we are going to break. And as we've talked before, I mean, realistically, I'm going to call it a signal either way. Break to the downside, absolutely a tradable sell signal. Break to the upside, absolutely a tradable buy signal. The big caveat there is, 59. Again, we've, an old resistance point, an old support level, just $1 beyond that. If that scares you, it's hard to say, probably above 59 is probably the bullish signal that you're looking for, so that's probably going to be an individual flavor. The longer we're in here, the more comfortable I get with not being afraid of 59. I reserve the right to change my mind. I love when things go sideways for a long time. I absolutely love it. So one of my favorite things to do, build up that anticipation. Let all those buyers think about how great it's going to be when it finally breaks resistance, or let all those short sellers think about how fantastic it's going to be when it breaks below that support. The psychology behind those breaks, to me, is the soundest in the market. And maybe I'm right, maybe I'm wrong, but that's what I think. So, continue to watch 55 and 58. I think those numbers are, have turned into very important numbers, at least from a short-term perspective. Really quick here before we wrap up for the day, just kind of, like I said earlier, kind of scrounging through my watch list, seeing, we had a lot of movement, and it did take away a lot of the risk reward on a lot of those pullback trades. Great if we're in them, not so great if we're not, right? But there's still a lot. I went through, I'm maybe not quite half of my list, but we still have a Dan that's still in that nice pullback, saw a little movement, but got smacked down when it got into its short-term moving averages. So didn't even trigger. At least not by my rules, it didn't. You have a CNDT, very similar type of situation. So you've got some things. You have a FND and things that look like this that broke out of some short-term resistance. Doesn't have a lot ahead of it. So there's still another pullback on KBR. Of course, you've got things like EA that was hanging around. I'm going to move to still you so I don't embarrass myself trying to draw a straight line. That didn't break out here today, that at least theoretically could, especially if the market wants to continue to run. Really similar type of situation as Facebook in many ways, although we didn't breach on the intraday on EA, same type of a pattern. So, there are still plenty of, great looking bullish trading setups out there that I'm running into. You don't have to agree. Of course, these are up to you. I'm not telling you who to trade. You guys know that. But I wanted to illustrate the point that there's still lots of great setups out there that may be your cup of tea if you, didn't, get into all of the bullish plays that you wanted today, or the ones that you've been looking at are a little too extended, have to now turn into breakouts before you can get in, because that happened in a lot of places. That's a good day, right? We're not going to complain about that, but we probably didn't trade everything today, right? I don't think that's the responsible thing to do. But there's still lots of bullish plays out there, still lots of things, that are testing, holding supports like that UNH, was it Allergen? They kind of propped up off of its 50. So, there still are potential things that have shown some weakness too. I think overall, this is going to continue to be a stock picker's market. I'm not terribly surprised that we saw some buying, especially when we broke down Friday's candle and saw really how strong of a day it was, right, off of that gap on the open. So still lots of interesting things for us, no doubt about it, throughout the course of the week. But ladies and gentlemen, that's going to do it for another market recap. But as always, it's certainly my pleasure. I certainly appreciate everybody's time. It's great to have you guys here with me. It's a lot more fun to do this with you guys than by myself. So thank you for hanging out with me at such a strange time, 4:30 Eastern, strange time. Not strange to me. That's when you're supposed to do it in my head. But thank you so much for joining me. If you are new around here, be sure to smack the subscription button and the notification bell so you can always be alerted to any new videos or streams that we've got going on over here. See if I can say that. And be sure to join us over at Tackle Trading on Twitter as well. Thank you. You guys are all very welcome. Thanks for joining me. You can also find me at FrankMartin23 on Twitter if you're ever looking for me as well. So never be afraid to say hello over there. I'm not a very good Twitterer, but I'm getting better. So, all right, ladies and gentlemen. Well, with that, get the heck out of here. Enjoy the rest of your Monday. Get ready for an exciting week in the market. We'll pick up same time, same channel here tomorrow afternoon. So thank you, everybody. And I love it, Whitney. Tulips are breaking resistance. That is a very good call. It's not happening in Utah yet, but that gives me hope, because if it's happening in Seattle, it can't be too far until it's happening here. So thanks a lot, guys. You guys have a fantastic afternoon, and I'll see you tomorrow. Bye, everyone.